Imagine a world like this. Imagine a world like this. You just need to invest a little money. Then you don't have to do anything. Where is your money? Over time. Multiplied with astonishing speed. Create unimaginable wealth for you. Does such a world really exist? Of course there is. That's the world of compound interest. Compound interest can make your money make money. It doesn't just generate money from your principal. It will also let you make money from interest. Buffett says, "Best investment of my life. Just bought a book teaching compound interest." And Einstein said, "Compound interest is more powerful than nuclear weapons." Today I will explain to you in simple terms the principle of compound interest and 7 compound interest assets that ordinary people can invest in. I promise. Whether you are an investment master or a financial novice, you can understand every word I say in this episode. What if you start acting immediately after listening? You will definitely be in a short time. Achieve financial freedom. Before starting this video, please don't forget to subscribe my channel and turn on the little bell. This is Wealth Accumulation channel. I'll let you know. Achieve financial freedom. It's a little thing that everyone can do. What is compound interest? Before I tell you, which compounding assets should you invest in before investing? Let's first understand what compound interest is. Compound interest is known as the 8th wonder of the world, because it can progress over time, generate exponential growth. Simply put, compound interest is simply adding the interest you earn to the principal. Reinvest. Let them generate more revenue over time. The magic of compound interest lies in its ability to balance principal and accumulated interest. Can generate income. What about over time? Then this compound interest effect will accelerate, thus accumulating a large amount of wealth with compound interest. Effect are also known as the snowball effect. It's like a little snowball. It gets bigger and bigger as it rolls down the hill. And your investment, it will also continue to increase due to the accumulation of compound interest. Fully understand the potential of compound interest. We can consider a practical scenario. Suppose you invest $10,000 in an asset. The average annual return on this asset is 8%. That lasted 30 years. In the first year, your investment has increased by 8%, which is $800. You put this $800 re-record to your principal. Then your current principal becomes $10,800. In the second year, the $10,800 is at an 8% rate of return. Generated an additional $864. So what? Your total stake now becomes $11,664. In the third year, the effect of compound interest continues to ferment. What about $11,664? And according to the rate of return of 8%, generated an additional $933.12. What about your current total principal? It becomes $12,597.12. Here, you can see, with the blessing of compound interest, the additional returns generated each year are also increasing significantly. What about 30 years? The initial investment of $10,000 will become about $106,626. Compound interest. Not just on the initial principal, also accrued on previously accumulated interest. So it makes the investment over time Exponentially significant growth. The longer that time, the greater the wealth that compound interest can create. Next, let's dig out the 7, slip of the tongue, best compounding assets. That's what these assets are. Most of the richest people in the world today. And make them richer and richer. Compound interest assets. Regular savings account. Regular savings account. A regular savings account is a type of bank account. What about a checking savings account? Regular savings accounts generally offer customers the same interest rates as higher. This is also the easiest of all compounding assets to start with, because he doesn't need a large initial capital. Although, what is the ROI of this type of savings account? May not have as high a return on investment as other investments, but he can provide you with a kind of security. And easy to implement. Come start accumulating your wealth. If, say, you deposit $10,000 in a regular savings account. 3% annual interest rate. 10 years. Then with the blessing of compound interest, your investment will be $13,439 in 10 years. What about the compound interest effect? Allows interest to accrue over time, thereby contributing to the overall growth of account deposits. That kind of account. Ideal for short or medium-term investment goals. Or as your emergency reserve. What about relatively conservative investors? This is an option that is both safe and easy to operate. Besides, these accounts generally also offer online banking. Handle business. What about investors? Can be easily tracked. And manage your own money. That compound interest asset. 2. Stock. Stock. Investing in stocks has always been a compound interest asset. Long-term popular choice. Historically. What about the performance of the stock market? Over a long period of time. Outperforms most other assets. And the ones that are growing financially are strong. What about companies with clear competitive advantages? Often in the long run. Capable of delivering well above average returns. Take Apple as an example. Apple's stock price has risen 305% in the past 5 years. Suppose 5 years ago, you invested $10,000. Bought Apple stock. What about today? 5 years later? Your stock will be worth more than $30,000. What about some stocks? Quarterly or annually? Regular dividends to shareholders. For investors. Steady extra income. And investors. And can you share these dividends? Buy stocks again. Thereby further accelerating the effect of compound interest. So what about these dividend-paying stocks? Provides you with capital appreciation all at once. 3 benefits of regular and passive income. Compound interest assets. 3. Real estate. Real estate. Real estate and dividend stocks. What is the return on investment for you? Somewhat similar. So let's say you bought an investment property. The appreciation of the house will bring you an increase in assets. What about at the same time? You rent out the house. What about the monthly rent? It will also bring you a stable cash flow. Then what? What about the part you use for rent and house appreciation? Can be reinvested to buy new properties. What about further? Diversify your real estate portfolio. Increase your return on investment. But what about real estate and other investments? There is a significant difference. That's real estate investment. You can make full use of leverage as a financial tool. Give an example. Let's say you only have $50,000. What about the stock market? You may only be able to buy stocks worth $50,000. So if your stock goes up 10% every year, you just made $5,000. But the real estate market is different. So if you have $50,000 in principal, there is a fixed income. You can do it with a loan. Buy a $500,000 house. Then if the growth rate of the house is also 10%, then your capital growth is more than $5,000. But $50,000. This is the benefit of using leverage. Of course, you need to consider the interest you paid on the loan during the year, house maintenance costs, and some taxes incurred when buying and selling the house. But if you find a good real estate target, what about using leverage to make your property return on investment exceed? Investing in the stock market is entirely possible. Fourth, compound interest asset bond. Bond. What about bonds? Debt securities issued by governments or corporations for raising funds. For example, the government needs to build a bridge, but there is no money. So the government issued bonds to raise funds from the private sector. What if this time you bought government bonds with $10,000? It's like the government promise they owe you $10,000. And before returning the money to you, the government will also pay you interest on the loan on a regular basis. Bonds usually pay less than stocks, but it's safer. In particular, government bonds are guaranteed by the government. Its reputation is much higher than that of enterprises. The possibility of its bankruptcy is much smaller than that of the enterprise. Before the government pays you back this bond interest paid to you, it is also a steady cash flow for you. Same. It can also be used to invest to increase your wealth, so that your assets can achieve compound interest growth. For example, you invested $100,000 on a 5% bond. What about the bond with a term of 10 years? Interest is paid annually. Suppose you reinvest the interest every year. Same 5% interest rate. How much will such an investment turn into in the end? In the first year, you get $5,000 in interest income. Then you reinvest this amount. Formed a new principal. That's $105,000. What about the second year? Interest is in. Increased principal of $105,000 calculated on. That generated $5,250 in interest income. Then you reinvest this amount. The new principal becomes $110,250. Through such compound interest. What about when the 10-year period expires? Your initial $100,000 investment. Because the reinvestment of interest will increase to $162,889. Gold, the fifth compounding asset. Precious metals investing. Precious metal. Precious metals like gold and silver can be part of your diversified investment portfolio. Strategic supplement. So it can help you hedge your investment risk. Why do you say that? Because precious metal investment has a characteristic. That is, the more turbulent the world is, the more cloudy and uncertain the economy is, the higher his return on investment. You can see. Since the outbreak of the Russia-Ukraine war in February 2022, the price of gold is skyrocketing. Then why is it like this? Because of war and conflict. Often leads to economic and policy instability. What about this instability? Often lead investors to seek safer assets. Precious metals, especially gold, usually considered a safe haven asset. What about in times of economic turmoil? Precious metals are generally not like other types of investments, susceptible to volatility. So when a war or conflict breaks out, people may buy more precious metals. At the same time, war can also disrupt supply chains. What about the supply of precious metals? May have an impact. Think about it, if the production of the gold mine is affected, then the supply of gold will decrease. Now the demand for precious metals has increased. The supply has decreased. Will the price go up naturally? So, even in good market conditions, I still recommend investing a small amount in precious metals. Because, if one day the market becomes turbulent, at least, he can help you hedge some risks. What about the specific ratio? Depends on individual risk tolerance and investment goals. I'm normal. The recommendation is to allocate 5% of the portfolio. Up to 10% is allocated to precious metal investment. Compound Interest 6 Index Fund. Index Fund. About index funds. I've talked about it in several of my previous videos. It's me too. One of the most recommended investment projects. The first is because his return on investment is relatively considerable. And what? His risk compared to individual company stocks. Relatively small. For example, the S&P 500 Index Fund. He regularly follows the former U.S. stock prices of 500 companies. Then you say, some of. Suppose there are several companies whose stocks fluctuate greatly. Not surprising. But, if the stocks of 500 companies are collectively diving, then the possibility is very small. Of course, when there is a financial crisis, even index funds aren't immune. But what about special moments like this? You can lose money even if you invest in anything. Overall, as long as you are optimistic about the US economy, that investment represents the S&P 500 of the US economy. It is a relatively stable investment strategy. Take the S&P 500 as an example. His average return over the years is 10%. The same reason. If you invest $10,000 in the S&P 500, according to his 10% annualized rate of return, after 30 years, your investment will increase to $74,494. It has doubled more than 17 times. The last compound interest asset, retirement account, allows you to wait until you are old to be protected. That is a retirement account. The money in the retirement account. It will also be invested by the pension custodian. Get a certain interest. In this way, we can also obtain compound interest income. But retirement accounts. One is different from the other. Several advantages of compound interest investment. That is, it can bring you tax benefits. Pension accounts in many countries. No tax. Or pay very little tax. What if you put more money? Put it in your retirement account. What about the money? It can save you a considerable amount of tax expenses. Of course, he has a downside. That is not like a bank savings account. Let you withdraw cash at any time. Then you have to wait until you are old and retired to use the money. 4 benefits of compound interest. What about the above? That's the 7 compound interest assets I'm going to talk about today. These assets all have a common characteristic. It can bring you a compound interest effect. So why? I'm in a lot of my videos. Will emphasize the compound interest effect. Because compound interest has 4 unique benefits. The first is that as time goes by, compound interest can generate exponential growth. The sooner you start investing, the more time your investment will have to grow to compound interest. That means even a modest investment, as long as there is enough time, can also accumulate great wealth. What about the second one? Yes, compound interest can help individuals reinvest their earnings, generate passive income. What about passive income? Can provide you with financial security and freedom, because it can continue to grow over time. The third is that compound interest can offset inflation. Inflation reduces the purchasing power of money. Because of inflation, the value of the currency will decrease over time. But it can produce. What about investments that return above inflation? Can help people maintain their purchasing power. Fourth, from a psychological point of view, see your investment grow over time. Long can develop your discipline and patience. When you see your investment grow over time, you can better understand long-term investment and avoid short-term market volatility based on the importance of making impulsive decisions. This mentality, critical to long-term financial success. Invest early. Compound interest is a powerful wealth-building tool. It can help individuals achieving financial freedom. How about by understanding the principle of compound interest and strategically invest in compounding assets? We can realize the exponential growth of wealth. Whether you invest in stocks, real estate index funds, bonds, or retirement accounts, the key is to start diversifying as early as possible. Please remember, compound interest takes time, persistence, and long-termism. It will make you feel more secure financially, will make you richer and richer over time. If you can make good use of these 7 compound interest assets, what are you going to do next? Just quietly watching your wealth soar. If you like this video, please don't forget to like, share, and subscribe my channel. I'll let you know. Achieve financial freedom. It's a little thing that everyone can do. This is Wealth Accumulation Channel. See you next time.